Hello and welcome. It's DC Capital and this is episode 13 for the Index Futures series. And in this week we will deal specifically with the market open Judas swing, and also I will analyze last week's trading, NFP week, and at the end of the video I will do the market outlook for the upcoming trading week. Let's jump right into the weekly review for NFP week. Welcome to the weekly review for the S&P 500. This is the weekly time frame, and we can see here this weekly fair value gap and the midpoint, the consequent encroachment. Price traded higher, mitigated this fair value gap, and from there price is trading lower. This candle is representing 1 week, and now we will take a closer look to the weekly range profile. Weekly range profile for the S&P 500 on the 1 hour chart. We can see that at the beginning of the week, on Monday and Tuesday, price is trading higher into a premium PD array, and on Wednesday price is finding the high of the week with the ADP and PMI manipulation. After that, price is trading lower into the close of Friday. Keep in mind that we are in a risk-off environment, and the current narrative for the S&P is bearish, and therefore market makers are engineering price higher to take the opposite side of the trade and establish short positions. Now let's take a closer look and we will analyze what happened during the week. This is Monday's trading on the 1 minute chart for the S&P 500. At the beginning of the week, the narrative, the bias was bullish. Why? Because there was this higher time frame premium fair value gap where I expected price to trade into. So therefore I was looking for long setups, and we can see that here on the chart. 9:30 equities open, manipulate price trading lower, seeking sell side liquidity. After that we can see displacement higher and the bullish market structure shift on that candle, and price is retracing into this 1 minute fair value gap in a discount market that is supported with this bullish order block in here. We are targeting buy side liquidity and or the symmetrical price swing from this low to this high is projected to here. Note time of day. We are operating in the Index Futures morning session, 9:30 a.m. to 11:30 a.m. Blending time and price together will lead to high probability trading setups. Let's jump right into Tuesday's trading for the S&P 500. This is the 15-minute chart, and this blue line here represents the consequent encroachment from the weekly fair value gap. And just go back a couple of minutes and then you can see it again, the midpoint of the fair value gap from the weekly chart. And this red line is representing the low end of the weekly fair value gap. Price on Monday is trading higher, and on Tuesday price traded into this weekly fair value gap. We can see that here that this bullish order block on the 50-minute chart is getting respected and is supporting price to trade higher into this weekly fair value gap. On this particular day, I was not willing to look for long setups because price moved higher on Monday and also on Tuesday, and it is trading into higher time frame premium PE arrays, which is again the weekly fair value gap. So therefore I was not looking for long setups, I was focusing on shorts, but we are prior to high impact news event on Wednesday, so I'm staying sidelines and don't try to force anything. This is Wednesday's trading, high impact news event for the US dollar. 8:15 a.m. we have ADP, non-farm employment change, and at 10 a.m. in the morning we have the purchasing managers index, also high impact news event, and we can expect manipulation and a high probability trading setup. This is Wednesday, the 2-minute chart for the S&P 500, and we will take a closer look to order flow and price action during those high impact news events. We can see that at ADP, non-farm employment change, price was stuck in a consolidation and was not willing to move a lot, and therefore I'm expecting price to manipulate during the PMI at 10 a.m. in the morning. And this is what we can see here. This is the PMI manipulation Judas swing. Price is trading lower, rating sell side liquidity, and we are looking for a target in the opposite direction. We are targeting opposing liquidity. During the index futures morning session, we can see that price traded higher, bullish market structure shift on that candle here, and this 1 minute fair value gap, buy side imbalance, sell side inefficiency, busy, is rebalanced, and price is in a bullish order flow. Also we can see that this low end of the weekly fair value gap is acting as real support, and an order block overlaps with that key level. Look at the close of those bodies of the candles. All bodies are respecting that institutional reference point, and price is trading higher into the low hanging fruit profit objective, which is this 2-minute bearish order block coupled with this sell side imbalance, buy side inefficiency. This is Thursday's trading on the 5-minute chart for the S&P 500. On Wednesday, price traded into the consequent encroachment, weekly fair value gap, and traded lower, rejected that level. So we can anticipate a high of the week and a bearish order flow to continue for the rest of the week. We can see that here, that market open, this move here is market open, that market open is manipulating higher, pairing up orders, engineering liquidity, think market efficiency paradigm, buy side got rated and into this sell side imbalance. So a bearish order flow is maintained, and after that price is rejecting this reference point quickly and breaks market structure to the downside on this candle. We are entering in a premium market if we're looking for shorts, and this is delineated with this 5-minute fair value gap, sell side imbalance, and also we have a 5-minute bearish order block which price is respecting really precise. We are taking profits with the time of day principle during the on-close orders time period, 3 p.m. to 4 p.m. This is Friday, NFP day, all eyes on NFP. It's casino time and I'm not participating during NFP. I'm standing sidelines, but we can see that NFP is trading aggressively lower after rating this short-term high with buy-side liquidity, and the bearish order flow is being maintained. Up-close candles are getting respected, sell-side imbalances are getting respected, and price is trading lower and finding the low of the day during the on-close orders time period. With that being said, I will finish the weekly review here, and now let's jump right into the market outlook for the upcoming trading week. Welcome to the market outlook for the S&P 500. The narrative is bearish and we are in a risk-off environment. In my opinion, the index futures are having a really hard time to trade higher, so therefore I'm looking to short every rally higher into a premium PD array and looking for sell-side liquidity to pair up my orders. I'm expecting the S&P 500 to trade lower during the next week, and I'm looking for high probability trading setups after a premium PD array has been mitigated. So this could be a buy-side liquidity rate, a bearish order block, or a sell-side imbalance fair value gap. Market outlook for the US dollar. I'm expecting the US dollar to continue its strength and seeking buy-side liquidity. On the weekly chart we can see that price traded into this weekly buy-side imbalance or fair value gap, and I'm expecting price to trade higher, and this will lead into a strong US dollar and a risk-off environment. So therefore I'm expecting the currency majors to decline as well as the index futures. And with that being said, I will finish this video here, and I wish you all the best in the upcoming trading week. And always keep in mind, be patient and don't experience the FOMO, the fear of missing out. If you like the video, please give it a thumbs up, comment and subscribe to the channel, as it will help to grow even faster. And I will see you in episode 14. It's DC Capital.